How you guys doing today? Shankar P right here. Like we do in every video, we're going to talk about the Bitcoin chart and where these altcoins are headed. So without further ado, let's dive right into the charts. Let's look at this chart here. So right now we have this is a bear flag at the moment. And so this is the Bitcoin chart. We have a bear flag at the moment. And we're currently, we've broken down from it. So what we're waiting for now is a bearish retest. So if we don't get that bearish retest and we break into the pattern, that is a good sign. But a lot of people on the crypto space right now is they're kind of divided on what's gonna happen. Currently we still we didn't go lower than this low here, so this could be a sign of a double bottom here for us to head higher to at least this 50k range at the top of this trend line right here. Our thesis is that we are gonna have a blow off top, just how the psychology of people are, because you got to remember these charts right here are all just the psychology of individuals. The price moving up, down, coming down here, it's all just the psychology of individuals. So we believe that for the last phase of the market, we do anticipate a blow off top. So that is what we're anticipating. A lot of people say Bitcoin is too big of a market now, but the whole of crypto is under $2 trillion, which is that's smaller than gold. So the crypto market is extremely small, so there is so much room to still grow. So what we're waiting for now is to get back into this channel and break up above it. But what we're looking to avoid, so I wouldn't get into any shorts or anything right now, is to see if you get a bearish retest. If you do, then you can short the break of this right here, and then take targets along this area right there. So that's where I would be looking to short if that were going to happen. But today for the S&P 500, it has been looking good. We have this bullish engulfing candle here, so it's very good. We've tested this as support, and we've held it as support. So what we're anticipating is we come up, and what we're really looking for is we're looking to get above the 200-day moving average. So we're looking to get above the 200-day, hold the 200-day, and then head higher for the last wave of this bull market before we head into a massive bear market. And again, so my scenarios is if we get rejected off this 200-day and we break, here, I'll probably start exiting a lot of my crypto positions, because getting rejected off the 200-day on the S&P 500 is a very bearish move. But if we hold, get on top, hold, and head higher, then I will be anticipating this final melt up phase. So the S&P 500 is having a good day today. It's up 2.5%. So that's really good, to be honest. What's this here? Let me take this up. So that's very good. But yeah, so it's looking like this bottom is holding. So what we're really looking for is just a cross over this 200-day moving average. So why we're anticipating this melt up before this major crash that we have is I want you to look at this. What I want you guys to look at is this the yield inverting, right? So the yield inverted, and we still had a retracement of 4%, and then we went on a rally. This was 2019. We went on a rally for 18% before crashing, right? So we went on a massive rally before crashing. We also inverted here again, and we went on a massive rally as well. We went on a great rally, but we did come down from that peak 7% before we rallied 28%. So the thing is you want to pay attention is right now we could be in this position right here where we're flirting and messing with the 200-day moving average. We're heading up, coming down. This is the double bottom. People may have been panicking. We got rejected off the 200-day and we're heading lower. And then we had that melt up that many people would have missed, right? Because I could imagine the sentiment back there in 2006, but then a year later, we did actually have the peak of the market, and then we got rejected and then just kept heading lower and lower. So this is something that I think this is where we could be right now. As you can see, we had this double bottom similar to where we are right now. Here, I'll just do it right here. So we have this double bottom, or high or low, depending on the time frame you're looking at, and then we rallied all the way up to the peak. But at the same time, you come up here, you come below the 200, many people would have been scared, and then held it as support, and then we head higher. So this is what we're looking for. Similar structure to where we are right now. We have this bull flag. It's literally the same thing, right? So if we look at it, we have this bull flag. All right. We have this bull flag here. Came up, thought we were going higher, thought we were going to hold it, get rejected, and then made a double bottom and head up. So I want you guys to look at where we are right now. So let's look at where we are right now. All right. So let me bring the chart. So exactly where we are right now. So we had, if I go back to the 8 hour, so we have this bull flag right here on the daily. We have this bull flag on the daily. We're looking like we're gonna hold. Get rejected. This is the double bottom. And then what we're looking for is now we hold the 200-day and then have our last leg up. So that's what we're looking for right now. So that's if we look, let me go back to where we were. Right, so it looks very similar to where we are right now. And the reason why I'm bringing this up is because the S&P 500 and the stock market is very correlated to Bitcoin. So if there is a melt up in the stock market, that's going to be very, very beneficial for cryptocurrencies, right? That's going to be very beneficial for cryptocurrencies. So keep in mind, the 10 versus 2 year inverting is an indicator that we will have a recession. I'm not saying we're not going to have a recession, and the recession is definitely sooner than later, and it's going to be a real recession with, I don't think we will have money printing and all the bailouts that we did, and this one will actually be a long-term, might be a decade recession where a lot of your traditional stocks and your portfolio, maybe you're investing in ETFs, they may not be performing as well. So you just got to keep that in mind, and that but it may not be. So for Bitcoin, this is where we're looking at right now. We're still anticipating the melt up, but we are looking, just as of today, we're looking to hold and not have a breakdown from here. If we do have a breakdown, look for a short after you break, after the price action breaks here, right? So just keep that in mind, because you don't want to go short up here and then it breaks back in, retests, and heads higher, and then that's a pretty risky trade. So really, that's all for today, guys. I just really want to talk about the S&P 500 and where we could be heading with it. Anything's possible, but we have our two scenarios. If the S&P breaks up and holds a 200-day moving average, we're expecting that melt up. We are still anticipating that melt up, but if we do get rejected off the 200-day moving average with the S&P 500, it may be a time to exit markets, and the recession is, just around the corner. So that's what we're looking for in the next couple of days. Please like, comment, share, and subscribe, and tune in next time for some more charts and TA on Bitcoin and the rest of the cryptocurrency market. Thank you so much.